Welcome everyone to this week's Elite webinar. My name is Riz. I'm from Riz International, and this week we're going to be getting to all the musings that have occurred in the market as I bring up here the S&P 500 index chart here. Boy, oh boy, bear with me here. We have taken it was last week we were off due to the long weekend, Labor Day long weekend. Um, this excuse me, is not broken anymore, but it's getting there to the downside. But yes, a lot of these levels are still in play. Take a look at the short-term resistance that we have here. Pretty brutal week, all things considered. Um, I know a lot of people were thinking, well, it's election year, it's bullish year, look at the V-shaped rally. And then only to come and see this occur in front of you, this waterfall down. That is not very, let's just say, confidence inspiring. And you will see that in the red line here, a very thin red line with the 200-day moving average, and then the light yellow is the 50-day moving average. I like to have my moving average lines very subtle. I don't like them overwhelming the chart. And you'll notice I like to have a pretty decent and clean chart as well. I don't have the Alpha Cross Evo on, just to keep that more proprietary for those that are in elite and have access to that. Okay. But other than that, simple chart, RSI, what didn't even get overbought before we started kind of dipping from near the highs, right? So in my opinion, we can call this a double top, okay? Not quite touching, but close enough. Okay, this is not an exact sign. So this is, in my view, a double top, and that is a rejection. That is the reversal, quote unquote, pattern, right? I don't really like the word pattern or these patterns in general, but there's a couple that I touch on in the master class that I teach students that are pretty solid. You won't find me doing some of the crazy wacko pattern stuff, but there's a few touch points, whether it's a double top, double bottom, triple top, triple bottom, those are pretty solid. Okay. And of course, you can use these not because they're like some gospel, but more so to get an understanding of supply and demand, buyers and sellers, right? Basic core concepts that are part of not only just economics, um, but also of market structure and price action. Okay. So enough of that lesson here. We got a big brutal drop, pretty much almost a red day, red week through and through. Um, and a strong break below the 5,500 support area. I had this on a support, not on this chart, but this is a short-term support. This is actually not short-term resistance anymore. So I am going to relabel this. This is now going to act as support. Okay, so you notice how charts change, not charts, but like price action changes, right? So it's important to uh, change as they go. And you're probably wondering, well, why haven't you updated these? Well, because more often than not, I am very rarely sitting there charting and looking at things on um, Google Chrome, like, in TradingView browser and marking these. Um, it's just not really what my go-to is. I'm predominantly on my phone, on interactive brokers. I'm usually using this alongside that here and there, but not necessarily to chart support and resistance levels on SPX on the S&P 500. Okay, I usually have it on individual stocks just to get a little bit more of an in-depth, more of a, let's say, a more detailed view, so to speak. Um, but other than that, it's updated here. You can see short-term support now. This short-term support has been broken, right? Clearly, we're right here at that 5,400 mark, just here and there bouts, right? But other than that, it's gonna be an interesting week. Do we come back and retrace back to the 50? I don't think we see 5150 area this week. I think that would be too much of a brutal drop. It's very rare to see an entire fill right back down, and that would put us right at the 50-day moving average, or sorry, 200-day moving average as well, right? So interestingly, we're still be above that long-term strong support of 5,000 that we saw back in April, right? So. keep that in mind. Just a few key levels here for you. Again, a lot of it is not a lot of it, but some of it is subjective. Someone could definitely have 5,500 as a key area, right? This just happens to be a potential resistance level before that's now turned to support. Okay. Um, Moving on with that, let's get to the individual sectors, right? Take a look at the sectors here that as they've moved pretty much everything down in tandem besides real estate. Look at real estate. I know it's kind of hard to see, so I apologize. But if I zoom in, the percentages are going to change. But let me see if I can adjust this. No, it won't even let me adjust the scale here. But real estate is pretty much the only thing that sort of flat on the week. Everything else, if you take a close look, is dropped. Not surprising. Even then, even after this pullback near touching the near highs, the double top I mentioned, the SPX is still up about 14, nearly 14.5%, right? So quite strong. We have energy pulling back quite a bit, as the market is kind of signaling a few things, which we'll touch on once we look in the commodities side. But yeah, nothing surprising here. No sort of asset class rotation type of scenario here. Just real estate holding strong sector, real estate sector, not real estate as a whole. Okay. Um, Now we get into the asset classes I mentioned. Take a look at oil. Okay. This break below that 71 kind of support area that we had here. Again, this is like a triangle flag, so to speak, a long-term triangle flag. As you can see, we go back to, if I draw this out here, if you really want to be specific or like, technical analysis or whatever the hell you want to call it. But here, take a look at that flag, right? So compression here coming in, and then there we have it. Okay. Do I like flags much? No. It's just, I just, I don't know. I don't know what it is about these things. Is like I'm trying to decipher things by looking at like moons and sea waves and the depth and height of a tide. Like I don't gravitate towards this kind of stuff. But it is there for those of you that do. I'm not gonna knock it in a sense, but I find that the more you add on a chart, the more you glean, take a look at this, like, double top here, that works fine, right? But then you could also say, okay, well, look at, there's plenty of head and shoulders patterns in here. Like, I'm not going to map it out, but if you eyeball it, there's plenty of head and shoulders patterns, right? Do they always mean a lot? I don't know. Anyways, point is we broke below the 70, 68.33 is the spot price right now because futures market is open. As you can see, I have the counter on. So this is bearish, very bearish on oil. Again, I don't have any position, but I am considering something at this point. Maybe, giving it a little bit of an area to kind of find a floor. We are right here at that previous touch point as well. We have touched 67, 68 area in the past, right? This year, or sorry, last year. And then, in 2023 summer, right? Other than that, we haven't touched this point at all this year. The last time we were close to here was the end of 2023. Okay, so it's like pretty much um a new low for the year. Okay, so be cautious of that. All right. Um, with gold, very much still holding the line, so to speak, consolidating here at the 2,500 area per spot price. If you want, or if it helps you, I'm just going to draw this here, just kind of like a channel to give you an idea, nothing precise, um, but to give you an idea how it's channeling in here for the past month and a bit, yeah, almost a month. Okay, okay, let's move that up a little bit. Oh my God, there we go. Okay, hopefully that gives you a little bit of an idea. So if we get a break below from a technical analysis standpoint, that's bearish. Right now, it's right at that support area of 25.16 or so. Not too much of a wiggle room, not too much of a movement, right? About $10, $15 difference here between these two levels in the spot price. So am I bearish gold overall? No. As I've said, I'm not a buyer, but I'm not going and betting against it. I think it's very strong. I think the market is giving a few warning signals along with oil. And what that means is the reason oil prices is coming down, production continues to be, I would say, higher than expected compared to what demand is. All right. And not only that, the market is forward looking. So it's saying, sure, demand is fine for now. And supply is obviously, OPEC does have the supply agreement still active. Um, but the market's forward looking and saying that what if we see this bad word known as the R word? And that's not Riz, it's recession. Okay. And people are gonna be like, oh, well, yeah, I thought the market, or the Fed and the market and everything is like, no, no recession, soft landing, soft this, everything is soft. Um, and it's just like, no, maybe some things are hard. Just kidding. I'm sorry. Sorry. Okay, a little bit of innuendo there. Okay, the point is that this is very much so um a bearish scenario. Gold being high is a bearish scenario. Moving on to the next uh uh asset classes, government bonds, I should say. Bond yields are down. Now, this is not bearish, but definitely letting you know that okay, interest rates are on the way down. We've seen that, right? Not surprising at all. Even the US dollar has kind of gotten to the lows of the year. Take a look at not quite, but getting close to the year. Again, this is the index. Once again, you're going to see that this is um, not specific to one compared to one currency. It's not the USD to Canadian dollar. It's the USD to all major large currencies, right? You got the yen, um, and all that kind of stuff. The Canadian dollar, the GBP, euro, all in the mix. Okay, so that also holding steadily. A lot of things kind of making their way down in that sense from a price standpoint. Bonds are down, U.S. dollar strength is down, uh, and all in all, we are now in that kind of hold your breath type of Fed rate cut moment. And I mentioned on Instagram, in Elite, pretty much everywhere that we are in a point of time where we are expecting, or everyone's expecting a rate cut. We are also 2 months away from the U.S. election. We are effectively also kind of near wrapping up summer months. So it's going to be interesting to see. We know September is also from a seasonality standpoint, now that we're done the first week of September, from a seasonality standpoint, September is bearish. But it kind of goes out the window, so to speak, what happens after September because it's an election year. All right. So looking at all that kind of data, with that in mind, I continue to be in 100% cash. Does that mean I have no positions open? No, I actually have positions open, but no long positions, meaning I haven't bought any stock or I don't hold any stock that I've purchased, in my trading account. So I have some short positions open. I have some short puts and calls, but those actually, when you take those trades from a trade standpoint and a settlement standpoint, you actually receive the cash. Hence why I'm actually over 100% cash, but most people will not understand that when I say it. So, be like, how can it be more than 100% cash? So, simply put, I have no long positions. I am all cash from a holdings standpoint. Okay. With that said, I want to move on next to the earnings calendar. All right. Pretty muted earnings week. Again, Super Bowl earnings time is done until, I believe, what is it, November? No, not November. When Q3 ends in September, so October, right? So we got another couple months, give or take, till we get back into earnings season full swing. With that said, Oracle is one that's probably one that you recognize. We have GameStop, obviously, the big um, failing retail video game retail company that's obviously a meme stock. Dave and Buster's, again, that little, let's just say, entertainment family fun time company. But other than that, nothing really catches my eye. Last but not least, Adobe. Right, not a big fan of Adobe either, but and you have RH if you like your furniture stuff. But other than that, pretty muted, pretty minimal from my interest standpoint. Like I'm not really torn up about Lovesack, like whatever that is, right? Like I just I just don't even like the name. So anyways, so with that said, moving on to the events. So what the this week has in store is not much up until we get to Wednesday. Pretty muted week up until we get to Wednesday this week. Um, we have core inflation, right? We have the rate inflation month over month and the year over year. So that's going to be very important. Take a look at what it was before and what's the consensus forecast is, right? Forecasting the inflation year over year to be even lower, right? So we do know that it's not any surprise. We do know that inflation has been trending lower. Hence, obviously, the Fed's mandate and more being inclined to cut rates now. Now that they seem that the inflation's kind of going lower and lower, and we don't have to worry about that exorbitant inflation metric anymore. But as I've said before, that the market always moves from one wall of worry to another. So all of 2021, 2022, it was all about inflation, right? It was, and rightfully so. It was a problem. It has been a problem. Anything above 2.5 to 3% max is a problem for any economy, in my opinion. Any Western developed capitalistic economy, I should say. Uh, so yeah, rightfully so. That was a big issue. Then we kind of moved on to inflation, but more importantly, rates. How are the rates and the rate structure, and are they going to be going up further? So we were in that wall of worry for that. Then we also added in another wall of worry, which is hard landing, soft landing, hard, soft, hard, soft. This is all I heard the last 2 years, and mostly soft. But then we got into now election year, and then rate cuts, rate cuts. When are rate cuts going to come? So these are all wall of worries and the narratives that you see the market will move from months and years. Okay, this is the beauty of markets. How once you realize nothing is static, nothing is the same month to month, year to year, right? So once you realize and accept that, uh, you'll be able to operate in markets much more efficiently. So now the wall of worry is, well, hmm, rate cuts are coming. How much are they going to cut by? Are they going to cut too little, too much? I don't think anyone's really worried about inflation coming back up. But who knows? Maybe next year we have that as a wall of worry. But for now, it's rate cuts. How much do we see? How much cuts do we see? How many cuts do we see? And then does it really end up making it so that the economy continues to move along at a decent clip without ending in up in a technical recession? Hence, no technical recession, meaning soft landing. Okay, that's the best case scenario, where you have a decent, higher than a usual rate environment, and then you start cutting, and then the economy remains strong. Even then, that's the perfect scenario, and that's what the market has been really focused on the past all year, even last year, right? We had a really strong market last year, even this year, even after the pullback a little bit, it's up 14%, like I said. So the wall of worries will change, and of course, we have that big chink or that spanner in the mix, which is the election, and markets don't really care, to be honest, in the grand scheme of things. Uh, who is president? Okay, I'm talking about the U.S. Overall, but even the global markets, they don't really care individually who is president, whether it's a Republican or a Democrat, or if it's whatever. Usually, the market cares more broadly speaking around policy, but even then, you'll notice like certain policies, the market just shrugs off. Um, and it's more so about sentiment, more so about the economic related stuff. And believe it or not, the person in the chair, the person in the Oval Office, is not sitting there writing policy on directly that directly impact the economy. They're not directly impacting gas prices at the pump. Many people have a false sense of confidence in what a sitting president has control over. They don't have control over inflation and all these things. Like they just don't. So people need to really get their expectations in check that a lot of the economic concepts and things that happen are not really much to do with who is in office. Okay. Um, so keep that in mind. Anyways, Thursday, PPI, month over month, not too big a deal, and then consumer sentiment. So on Friday. So Wednesday is obviously the big one. Okay, the big day for big data releases. And then I believe the week after this is the potential I believe a Fed rate meeting. Don't quote me on it. I have to check, but and that's where we're expecting 25 basis point cut, the first cut in I believe 2 years. Um, and actually over 2 years. And there is some talk of maybe a potential 50 basis point, but that's a little bit more speculative. Okay. With that said, let's open it up to the floor for any questions that you may have. Some fantastic participation from an attendance standpoint. Sorry. Amazing to see. But any questions that you may have, let's address them. Just scrolling up in the chat, no question there. But yeah, please get them in. And I would be happy to answer them. But with that said, here's again, back at the S&P 500 chart. For those of you, I have a question coming in now. Startup position on Microsoft. Could I get your thoughts on it? Entry at 401.50. Okay, great. So Microsoft, woof, just pretty much at break even, let's say. Um, Dylan's asking, so you took a position in Microsoft at 401.50, starter position though, so not bad at all. Based on how the market's moving, based on this price action, I would personally rather like not take my chances with any further downside, just personally. Like, just this is not the most it's amazing company, right? Amazing company, great management, yada yada. But it's already had a tremendous move. We're kind of getting back to really, if you think about it, that 400 support, right? Wouldn't be surprised if we get there. The fact that you have a starter position and that you are in um, uh, near break even, just slightly, just a tick above break even, I would personally feel like taking the risk off, right? We don't need to try and play this. This is the problem. When we have an environment where there's more potential downside than upside, we want to really, really, really take the risk off. And if you were losing money on this and maybe your entry was like 395 or 400 and 5, sorry, not 395, but like 405 or 410 or something, I'd be like, okay, it's a starter position. Maybe just see how it goes. Maybe, you consider an entry at 390, assuming the market finds a floor. But because you're at break even, you have a starter, just I would personally say take it off for break even or close to and just scratch that trade and then wait for a better potential entry. Who knows? We might see 390, might see 395. All right. So that's my 2 cents there. Okay. Um, I got another question. What sector do you think will hold strong if the market continues to slide downwards? Example, utilities, metals, etc. Yeah, so good question. In my view, let's flip up back to the sectors area. So here is the sectors again, year to date. So usually the defensive sectors, when we see markets continue to go down, especially if we do see the proverbial recession, so to speak, and this could take time. You want to be in more defensive sectors. So you're right, utilities is one, right? Metals is not a sector of the S&P 500, so to speak, but there you could be in certain metal companies. You could be in metal ETFs, right? There's gold ETFs, silver ETFs. You could also consider consumer staples, right? So consumer staples are the companies that Not saying they're going to go up in recessionary times. They will maybe go down as well a little bit, but they'll be a lot more insulated. They'll be a lot less volatile and have a lot less downside than something like tech or consumer discretionary. Okay. So consumer staples are things like, people will always need. You can think Johnson and Johnson, a lot of the large um, pharma companies are not only obviously in the pharma sector, which is XLV, but they also kind of fit into a consumer staples standpoint as well. So those are the key defensive areas you want to consider. Okay. But I like to look at it from a case by case basis. I don't want to just think to myself in a very um, boxed in standpoint where like, okay, maybe we see market continue to go lower, so I'm just gonna get into defensive stuff now. No, no, if I'm not in myself in those defensive companies yet, or not defensive companies, but defensive sectors, why is that? Because I don't want to get stuck. I don't want to be rigid. I rather be a little bit late to the party, than be too early and look foolish, if that makes sense. Okay. Um, Next question, Eric asks, opinion on your open short. So I there's a list of few, right? And that's a very valid question, Eric, but I'm not going to get into the breaking down each one because they are higher risk, higher reward. A lot of them don't need follow much in terms of technicals, right? There's no precision involved in entries or exits. So all in all, these are very much trades that are not suitable for everyone. And as a result, I'm gonna like not get into them because they're really out of the scope of this webinar and for the public. Um, but all in all, I continue to hold the short positions, even if they've gone higher than our entry point, even if I've averaged in a bit, even if they seem to be quite a bit resilient and stubborn, I still am giving them a little bit more time. I still am holding them. I know that, yeah, I can be wrong in them and end up taking it off, but generally speaking, these aren't the most solid or even close to solid or great companies. They're mostly dog shit, probably worse. So, hence my short positions on them, right? So hopefully that gives you a little bit of an idea as to my thought process on it. I apologize, I'm not gonna go into the details, for like I said, for many reasons. Okay. Jazz is asking, we took crowd off right off the top. Yes, sir, we did. And we took that off. Let's bring it up. We got it out, a near term top here. Uh, took it off, and it's just kind of gone lower since here. I think we took it off around here, end of August. So it's just gone lower since. Jazz is asking, any plans to get back into it? Yeah, I have this on my watch. I have been keeping an eye on this for a re-entry, but obviously with the current backdrop of the markets, I kind of held off. One, because they've already had earnings, it was decent, but not very enthusiastic. The market wasn't very enthusiastic on their earnings. Um, and obviously the current price action for this week didn't help either. I'm not in a rush to get back in. It is a company that, it's a growth company, it's in the right sector, it's not going anywhere. It's not going anywhere from a continuity standpoint. Um, so it's one of those things where obviously the company isn't profitable. It is a growth company. It has good revenues, has a fantastic client list. It's in the right sector, data security, cybersecurity, um, you know, all that kind of stuff. So if I can wait and be patient. I'm not saying we see the big drop of like 201 that we saw back in August. That was massive, like huge. It was like 50% drop in like 3 weeks from the highs, right? Um, and for those that could get in at that, that was extraordinary. Especially if you could ride it out to from 200 and something, 201 to like even 270, 260. That would have been extraordinary, right? So I'm not looking to rush into it, but yes, it is on my watch list. Okay. What else? Next question. What do I think about Nvidia's sell-off? Yeah, not surprised. Nvidia. You're not a surprise at all. A lot of this stuff was very much overbought or valued. A little bit less so now. And if you really want to look at it from a technical standpoint, we can draw this resistance potential, triple top maybe here. Definitely a double top, but went down and came back up. So definitely 130 area seems to be that very key resistance area. This is now down here, back at 102. I think we can see, see how we have this little gap here. I'm not saying we fill that back down to 95, but it's something to be cautious of. I'm not a buyer here. Um, Definitely not a buyer here. We did short it. We did short it. We did trade this, by short puts, and we shorted the stock as well. So I'm pleased with kind of how we've done with this. But I'm not looking to try and ride this downside. It moves really big, really fast, and it's very much dependent on the market. So you'll notice a lot of the semiconductors just move in tandem. This is one of them. Okay. Uh, Abhishek is asking, SPX 5300 support this week. Yeah, great question. So oops, I don't know why I'm doing that. Um, let's bring that here back. So let's see if we can get another area. So 5300, not the most like, I would say, clear cut support, but definitely that whole 5300 mark is definitely important, especially as we get to 5400, right? We haven't broken the 5400 yet. Uh, so just keep that in mind. That's a very short-term support that hasn't been broken yet. If it breaks below, yeah, I think we could see 53.15, 53.30. We know the market moves fast, especially Friday. Friday was a really um big red did unexpectedly. I didn't expect it to be that much of a drop, especially um uh after Tuesday. I think it was Tuesday, right? Yeah, Tuesday, September 3rd. We already had that, and then a little bit of like a sideways kind of movement, but then we see Friday was even more bearish. So hence why I'm not rushing into getting anything into yet. But yeah, 5320, 5300 area is kind of the next area to keep in mind. I'm not going to draw it as support because it's not as clear cut, right? I would mostly call this like the full 100 point area, 5400, 5300, 5200, right? 5200 seemed more of a important area. But that's still about a 200 point away. Yeah, as a target, yeah, I was saying, yeah, as a target, yeah, potentially. Definitely good to have that as an area to keep in mind. Um, if you think about it, so if we see 5300 this week from where we were at the start of last week, to 5300, that will be a 6% drop in the market in 2 weeks if we see 5300 this week. Okay, so that's something to keep in mind. That's quite decent of a drop. That's even faster than what we had the last time around back in July and start of August. Okay, so keep them in mind. We also know in the next couple of weeks, in the next week or so, we also have the Fed meeting, I believe. And I believe it's not this week coming up, but the next week after that, if I'm not mistaken. Okay, so keep that in mind. Um, with that said, hopefully that gives you a little more clarity around markets, your individual stocks. Any other question? Last call, before we wrap it up for the evening. Um, so far, some fantastic questions, some great participation as well. My thoughts on J&J. Dylan asking J&J, fantastic company, no position, of course. Notice how this has had a nice run um, the past month and even the past week where the market was dropping. Uh, this did too, certainly Wednesday, Thursday, Friday, but by no means that much. It pretty much closed the week relatively a little bit higher than where it was the previous week, right? So it actually ended the week little bit positive from Friday to Friday. So not bad at all. This is what I mean when it comes to certain defensive companies, defensive stocks. Um, they're not a bad idea if you want exposure to the market, if you want exposure to um, you know, being long. I rather just be cash personally. But if you want to be invested, and you do feel like a recession's coming or the market's going to continue lower, yeah, you can definitely do worse than buying something solid like J&J. Am I buying this now? No. I like to have a little bit more margin of safety in J&J. It's a little bit of a slower mover, of course, right? It's a lower beta stock. I like the, 160 area personally. Um, Still a bit of, away. Like I said, this doesn't move as big. It's not Nvidia or anything. So 160 at least would be like my point to even consider. Ideally, if you would get around this kind of key pivot inflection area of like 158, you will notice that we have the 50-day and 200-day moving average here as well. So the closer we can get to that, the better. Okay. Jazz is asking LIF Geo is below 30 now, depending keeping on your watch list. Yeah, so LIF is always something that I kind of keep an eye on. Um, uh, Canadian, here we are. Okay, so here we go. Below 30, 28. So notice how it was just consolidating like crazy, right? So this is a great metals royalty company. So they're not a mining company. They don't mine iron ore in themselves. They provide the funding, the capitalization, all that kind of stuff. And then as a result, if the miners and the exploration company they find something like an ore vein, they find a deposit, then anything that comes out of that deposit, Labrador iron ore, gets the royalties from it. So this is a very lean, efficient company, albeit a smaller company, it's a Canadian company, um, and they have a great dividend as well. This is definitely a good potential entry point. Um, I'd like to see it find a little bit of a floor. Look at this multiple touch point, right? Beautiful, like 28, 50 area, multiple touch points, beautiful. Like I'm not, maybe I'll just mark it just so you can see, right? This clear cut um, support for now, right? Like long-term support for the most of 2024. It's held up, right? So um, the last time it was here uh, before this year was back in 2023, right? In May. So an important area to keep in mind, definitely a great company. Let me see if I can bring up some stats for you on this one. Where is it? Yeah. So this is how big is the market cap? Here we have 1.8 billion, right? So a smaller company, again, Canadian. Um, we have, look at the dividend, right? So right now the yield is 10%. And I'm not saying you should, the higher the dividend yield, the better. Absolutely not. It's just that I've held this company, invested in it many, many years. Uh, it's a bit high. The yield is a bit high. The payout ratio is very high because it's a royalty company. It's kind of like a almost a REIT in a sense that it pays out most of the earnings to shareholders that it gets. All right, because it's a very lean operation. Even if I go here further, I don't know if it'll show it, but last I checked, um, the company, okay, what is it? I think the headcount, employee headcount when I went on their website, it was like they have like look, here we go. Right. So here, look at the employees. Um, they've obviously increased the employees, but before, um, they used to have a very, very lean operation back in the day. Um, they've increased their employees, but they had a very small uh actual people that worked at the head office was like minimal. Um, so keep that in mind. Smaller Canadian company. All right, fantastic from a dividend standpoint, but remember, never ever chase highest yield. Oh, if the yield is higher, definitely better. No, you want to look at it holistically with the large, looking at many different parameters. So this is a great company, something to consider if you want exposure to a Canadian mining proxy, not directly mining, but proxy. Okay. Uh, Question from Miguel. Okay, great questions coming in. Starbucks. Starbucks had a big move, as we know, after they announced that new CEO kind of gave back most of the jump, but uh, there's that big gap fill here, right? Do I see it? Miguel's asking, do I see it come back down to 77? No, it's I don't think we see that anytime soon. That's a really big move down, right? Starbucks doesn't move that big. Yeah, it's moved because of post earnings, and then they had the CEO replacement announcement. But I don't think we see 77, 78 anytime soon. Okay. It's not that big of a mover. And yeah, it's very bearish the past week. But next year, yeah, I'd keep an eye on it, 87. Okay, that 200-day moving average could act as a nice support. All right. Okay, fantastic. Some fantastic questions. Appreciate it. Amazing. For those of you watching on YouTube, please give us a like, subscribe. It really means a lot. Appreciate it. Even those of you that are watching the replay, whether you're an elite, please keep an eye on these. Please participate as much as you can. Engage with our content on all our channels, whether it's YouTube, Instagram. It really helps a lot. Uh, we do our best. We're a very lean operation as well. We try and provide as much value, as much real, no nonsense um, insights to you. Um, and I hope it's something that you resonate with. And if you could just please do the best you can to support. I really appreciate your support already, of course, as it is, but every little bit that you can do, I appreciate that. Means a lot. We're continuing to, of course, continue full steam ahead with what we're doing. We don't plan on getting off the gas, and we could continue to conquer markets together, and not only be better traders and investors, but be better together as a community, as people. So with that said, um, I appreciate the support. I appreciate everything. It really means a lot. And thank you so much. And of course, any questions you have for those of you in Elite, anything you have, any questions, concerns, I'm an open book. Feel free to reach out to me directly. You have access to me, directly in Elite, of course. So, again, something that's not very common, but Elite is my baby. It's my priority, and I hope it shows. Okay. With that said, have a wonderful rest of the weekend. We're doing this on Sunday today, and tomorrow is Monday. So, let's get right back to kicking ass. All right, guys, take care. Ciao.